While you slept, the biggest vote of jobs week got cast early, and it wasn't cast by the Fed. Word broke that U.S. and Iran negotiations resumed today, and oil crashed 5% overnight. Stock futures woke up green, gold sank, and the one number every inflation hawk leans on just got cheaper by the barrel. Monday was supposed to be a quiet staircase step. Instead, the Fed fight got a new vote before sunrise. Here's the timeline. Yesterday's Sunday briefing gave you the map. 5 days of labor data, climbing to Friday's jobs report, the number with the power to settle whether money gets more expensive. That map still holds. But overnight, something jumped the queue. Oil is not just a commodity. It's the loudest single input into inflation. It's in your gas tank, your grocery truck, your airline ticket, your electricity bill. When oil moves 5%, the inflation math that the Federal Reserve argues about moves with it. Remember the 3 dissenters from Thursday, the officials who voted to raise rates because inflation isn't finished? A meaningful part of their case has been energy staying stubborn while tensions around the Strait of Hormuz kept a war premium in every barrel. Overnight, that premium started draining out, diplomacy back on the table, tankers moving, and crude down 5% before Monday's open. Futures read it instantly. Stocks up, gold down, the fear trade unwinding. So the question of the week just got sharper. The dissenters need hot inflation and a hot economy to win September. This morning, the market took one of their best arguments and marked it down 5%. Friday's jobs number still gets the final word, but oil votes first, and it voted dove. Let's walk what happened and what it changes. Start with the tape that finally got to speak. Yesterday we told you, Sunday 6 p.m. Eastern, futures reopen, and the frozen Friday prices get their first say on everything the weekend produced. The weekend worry was real. Crypto spent Saturday and Sunday drifting lower with its fear index stuck at 27, and the open question was whether Monday would gap down to agree with it. It didn't. The news changed first. U.S. and Iran talks resuming today, per Sunday night reporting, and the reaction was immediate and textbook. S&P futures up about 0.5%, NASDAQ futures up about 0.75%, Dow futures up about half. That's not euphoria. That's relief doing what relief does, buying back the risk it sold when the world looked scarier. And the purest read of the relief isn't in stocks, it's in the war trades. Oil down roughly 5%, West Texas crude near $80 and change, Brent under 84. Gold down toward 4,050, giving back its fear premium. When oil and gold fall together while stocks rise, the market is telling you one specific thing. It is pricing out conflict, not growth, not earnings, peace, or at least the credible possibility of it. Now connected to the fight this channel has tracked since Thursday. The 3 Fed dissenters want rates higher because inflation, in their read, is not beaten. Walk their evidence chain. Inflation near 4%, a consumer still getting squeezed, and energy, the input that touches every other price, held hostage to a shipping lane on the other side of the world. That last one was their ace. You can't cut rates, the argument goes, while a single strait can reignite every price in the economy. 5% cheaper oil starts undealing that ace. Cheaper crude works through the economy like a tax cut nobody voted on. Gas prices ease within weeks. Shipping costs ease behind them, and the headline inflation number that terrifies central bankers gets mechanical relief. Remember, the consumer sentiment bounce we covered Friday was driven almost entirely by cheaper gas. Now imagine that continuing into September. Here's the honest structural read. If the diplomacy holds, the doves get the 2 things they need at once: cooling inflation inputs and a Fed with cover to stand down. September's live meeting drama deflates. If the diplomacy collapses, and this is the part to keep in your pocket, everything reverses in an afternoon. The war premium reloads, oil snaps back, and the dissenter's case comes back stronger for having been doubted. One headline built this morning's calm. One headline can unbuild it. Which brings us, one more time, to the market that refuses to join the party. While futures rallied overnight, Bitcoin did approximately nothing, 63,000 and change, flat on the day. The total crypto market drifted up barely 1%, and the fear and greed index sits at 28. Still fear. Stocks got peace talks and bought them instantly. Crypto got the same headlines and shrugged. 4 straight days now, the pattern has held. The 24-hour market is the most pessimistic voice on the board, and it's worth saying plainly what that might mean in both directions. The bearish read, crypto sees liquidity, risk the equity market is ignoring, and it's early again, the way weekend nerves preceded Friday's wobble. The bullish read, this is what a bottom feels like, maximum fear with price refusing to make new lows, and the crowd that's scared at 63,000 is the fuel for the next leg up. Cycle veterans will tell you both stories are always true until one of them isn't. What we know for sure, the 2 tapes still disagree. The disagreement has survived a winning week, a nervous weekend, and now a peace rally, and Friday's jobs number is the scheduled referee. Also on today's card, the staircase officially starts. The ISM factory report lands at 10 a.m. Palantir kicks off a monster earnings week tonight. AMD tomorrow. Disney later on. The receipts keep coming. What this morning means for your money, not advice. Structure. 3 things. First, understand what kind of rally this is. Overnight strength built on one diplomatic headline is rented, not owned. It can be genuine. Oil staying down would be real economic relief, but its foundation is a negotiation that hasn't happened yet. The practical move isn't to chase it or fade it. It's to label it. This is headline risk in both directions, sitting on top of your portfolio all week. Position sizes that let you sleep through a reversal are the whole game in weeks like this. Second, cheaper oil is a quiet raise for almost everyone watching this. If crude holds these levels, you'll feel it at the pump inside 2 or 3 weeks, and it lands exactly like a small tax refund, a little more margin in every week's budget. The empowering frame, that margin is the easiest money you'll get this quarter. It costs nothing to notice it, and it costs nothing to save it instead of absorbing it invisibly. Third, keep the week's map from yesterday taped to the wall, because this morning just raised the stakes on it. ISM today, ADP Wednesday, jobs Friday at 8:30. The oil crash means the dissenters walk into Friday already down a card. A weak jobs number now probably ends the hike debate entirely. A hot number sets up the strangest fight of the year. Cheap oil saying relax, hot wages saying tighten. If that's Friday's print, expect violence in both tapes. And expect this channel at 7 a.m. Saturday to sort it out with you. And the standing line holds one more morning. Cash still pays 3.5% to wait. In a week where one headline moved oil 5%, getting paid to be patient is not a boring strategy. It's the only free lunch on the board. Nothing here is financial advice. It's the map, updated overnight. Your money, your call. Today's question, and I want your honest read, is the war premium actually gone or just on loan? Oil traders spent months pricing conflict into every barrel. One Sunday headline took 5% out. Do you trust it? 2 pills for Monday. Blue pill. Trust the diplomacy. Talks resume. Oil keeps easing. Inflation cools on schedule. And the dissenters quietly lose the argument without a fight. The weekend's boring, and boring is bullish. Red pill, rented calm. Negotiations are a headline, not a treaty. Keep the hedges, keep the cash earning, and treat every green candle this week as borrowed until Friday's jobs number signs the loan. Skeptical, and this week, maybe just realistic. Blue or red, and tell me which headline would flip you. 10 a.m. today, the factory report starts the staircase. Tonight, the earnings receipts resume. Every morning at 7, the timeline gets you there first. Subscribe so it keeps finding you. We watch the forces, you keep the decision. The timeline keeps moving. We'll see you in the next one.